we're moving towards much more of solar panel production being with this newer technology called TOPCon. And TOPCon uses up to 50% more silver per panel. So even if you get a slowing in the growth of solar panel production, you're still switching to a new technology that itself just requires more silver for each panel. So overall, I think that industrial demand will stay very strong. And like I say, you've got, if you've got a recession, if you've got economic slowdowns, you have government stepping in and kicking in the stimulus. So I would expect that this is going to hold up really quite well.
The Silver Institute forecasts a global silver deficit of 182 million ounces for 2024, a 4% decrease from the previous year. Demand is expected to rise to 1.21 billion ounces due to record industrial use and recovering jewelry consumption. However, a 16% decline in physical silver investment may offset these gains. Mine output is expected to rise by 1% due to increased production in Mexico, Chile, and the U.S., with recycling contributing an additional 5%. In the first half of 2024, India's silver imports skyrocketed to 4,554 metric tons, up from 560 tons the previous year, driven by stockpiling and rising industrial demand. The ongoing silver deficit has been partially alleviated by reducing above-ground inventories. PeterKrauth points out that reserves in exchanges like COMEX and LBMA and silver-backed ETFs are declining. As these supplies diminish, the market is turning to private hoards, which may require significantly higher prices to become available. A key driver of silver demand is the renewable energy sector, particularly solar panel manufacturing. As global targets boost solar panel production, silver demand in this sector is expected to hit a record 232 million ounces in 2024, almost 4 times the amount used in 2015. This emphasizes silver's vital role in the green energy revolution and suggests ongoing market pressure. Silver's growing role in industrial applications, especially in renewable energy, offers a compelling investment opportunity. However, investors should watch for price volatility and supply constraints. Although the 2024 deficit may narrow slightly, ongoing shortages are expected over the next 5 years, possibly reaching record levels. As Krauth highlights, strong industrial demand will likely continue to outpace mine supply and declining jewelry demand, maintaining significant market pressure. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
There actually is some interesting data recently. So the one that most people follow is the Silver Institute. And earlier this year, they were predicting that we'd have a deficit of about 215 million ounces. And now, interestingly, they've revised that down a little bit. They think it'll be closer to about 180 million ounces. Either way, we're somewhere around 20% of silver supply. So just to kind of refresh your viewers on this, the silver market is about 1 billion ounces a year supply. About 85% of that comes from mining, and the other 15% roughly comes from recycling. But demand is about 1.2 billion ounces. So we're really consuming 20% more silver than we're producing every year. And so, earlier this year, I started to dig into this to figure out how come the silver price isn't just absolutely rocketing in this kind of environment. And what I saw was that you've got inventories in the large silver exchanges, futures exchanges like the COMEX, the LBMA, the Shanghai, and the silver ETFs as well, the silver-backed ETFs. You've got a lot of silver there, but those inventories have been dropping dramatically since early 2021. So I think that a lot of the deficit has been filled by tapping into these above ground secondary supplies. I think the game is really getting really tight in that aspect. There's no doubt some, I guess you could call it undocumented secondary supplies. In other words, hoards that are held privately, whatever, larger hoards, even small amounts. People are slowly sort of starting to sell it back into the market at these higher prices. But I think that's quite limited. I think these kind of difficult to measure supplies of silver, secondary supplies, are pretty tightly held and are going to want to see considerably higher prices to eventually come in to help meet the deficit. The Silver Institute themselves have said that they expect these deficits to go on for multiple years going forward. They think we're going to actually see new record deficit levels in the next 5 years. And they did revise their deficit recently for 2024 down a little bit from, like I say, about 215 to about 180 million ounces. Part of that is they think that the jewelry and silverware demand will come off a little bit. They also think that mine supply will go up a little bit. But I think that that's a little too conservative, frankly. I think that, one of the biggest drivers is industrial. Now, if you compare what it represents percentage-wise to total supply, if you ignore these secondary supplies, industrial is now 70% of the entire supply of silver. So 700 million ounces versus a billion ounces. That's pretty substantial. And a lot of that, is in applications where the silver is not replaceable. The biggest and best example is solar panels. And solar panels, although, you've got some saying, well, if we get an economic slowdown, China certainly is struggling economically. They had a big stimulus package. They're now looking like they're going to be doing even more stimulus. They have a lot of overcapacity in solar panel production, which means that there's not going to be any limit to supplying solar panels.
As PeterKrauth highlights, silver plays a critical role in technology and industrial applications. Its cost impact on products like electric vehicles and smartphones is minimal, ensuring steady demand even with rising prices. Manufacturers readily absorb or pass on small increases to consumers, reinforcing silver's indispensable position in modern production. The rapid expansion of the solar energy market has further amplified silver's significance. Driven by concerns over climate change, energy independence, and global decarbonization commitments, the photovoltaic sector accounted for 15% of all silver demand in 2023. This growth is fueled by ambitious renewable energy targets set by nations like India, China, the United States, and the European Union, where solar power leads the charge in new installations. The International Energy Agency projects that solar photovoltaic capacity will account for over 60% of renewable energy growth in the next 5 years. This trajectory underscores silver's strategic importance in meeting global energy goals, with increasing solar capacity directly correlating to tighter market conditions for this vital metal. Let's get back to the interview.
It's supply inelastic to price. In other words, if the price goes up, the supply basically does not react. About 75% of silver supply comes from mining other metals. So just to kind of explain quickly, the 3/4 of silver supply, mined silver supply, comes from mining gold, copper, lead, and zinc. The miners of these other metals who mine silver as a byproduct don't care that much about the silver. The silver is sort of a nice bonus for them. It's not valued all that highly. And frankly, they're happy to take whatever price they can get for the silver. But if the silver price were to go from $30 to $60, odds are they would do nothing differently. They would accept the $60 price because it's a relatively small portion of their revenue stream. Even at $60, they wouldn't go out of their way. And it's not that easy to expand a mine. It's not that easy to, get it permitted for higher capacity, all of these things. So they would probably keep churning out the same amount of silver. And as I say, accept happily this higher price for the silver, and it would just, boost their bottom line. So that's why I say its supply is inelastic to a higher price. The supply will probably not move much, even on a considerably higher silver price. And that becomes a bit of a vicious circle, right? Because then the price goes up because the market starts to realize, hey, there's not going to be more silver coming to market, even if the price is higher. So, and to your earlier point, you're right. A lot of applications for silver require very small amounts. So if you think about an electric vehicle, for example, or a tablet, a smartphone, a television, whatever it might be, sometimes it's a few grams of silver. We're talking about a few dollars for each item. And if that, obviously everyone wants to streamline and maximize profits, but if the price of a tablet, for example, goes up, the production cost, let's say, goes up by $3 or $5, it's unlikely they'll absorb it. But if they end up pushing the retail price up by maybe even double that, it's not a huge increase on, a $300, $400, $500 item. And so the higher silver price would not necessarily impact it all that much, but they absolutely need it. It's indispensable. It's what some call a hybrid metal, because it's really got two sort of generational drivers, right? You've got, like you say, this tech and industrial side to it in terms of demand, which really has no choice. It needs to keep consuming it. It can ebb and flow a little bit, but I like to say that it's sort of the industrial side of demand that provides a rising floor under silver, and then it's the investment side of it, the investment demand that comes and goes, so ebbs and flows more in a more pronounced way. Because it's more capricious, I guess, a little bit. And it also depends on kind of what's going on geopolitically and so on. It's more reactive. But when it comes with some dramatic force. And it could really shock in terms of the percentage it represents of the silver market.
The ongoing silver deficit and its vital role in the renewable energy sector highlight its growing importance as an investment asset. With strong industrial demand, particularly from the solar energy market, silver's value is poised to remain under pressure, driven by both increasing demand and constrained supply. While price volatility may persist, the long-term outlook for silver, especially in its role in the green energy revolution, presents a compelling case for investors. Given silver's critical role in the renewable energy sector, how do you think its increasing industrial demand will affect its price in the coming years? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.